One of the first Elliott wave patterns we devoted an entire lesson to was the ending diagonal. It is relatively easy to recognize and very important, because it is usually followed by a sudden trend reversal. But if there is an ending diagonal, there must be a leading diagonal as well, right? Yes, there is, and it is the topic of this video. The leading diagonal pattern is very similar to the ending one. It consists of 5 subwaves labeled 1, 2, 3, 4, 5. Its first wave is usually the longest, while the third wave cannot be the shortest among waves 1, 3, and 5, and waves 2 and 4 are always corrective. Waves 1 and 4 should overlap. There are, however, a few notable differences. First, leading diagonals occur in the position of the first wave within a regular 5-wave impulse or in the position of wave A of a simple zigzag correction. Second, unlike ending diagonals, where each of the 5 waves is corrective in nature, the structure of the 3 motive waves of the leading diagonal, 1, 3, and 5, can be corrective as well as impulsive. Let's see some real-life examples. This chart shows a complete 5-wave impulse drawn by the USD index between April 2011 and January 2017. Pay attention to wave 1 in brackets. It is a clear leading diagonal. It consists of 5 subwaves marked 1, 2, 3, 4, 5. Its contracting shape is obvious and waves 1 and 4 are overlapping. Leading diagonals carry the same meaning as regular impulses. They indicate the direction of the larger trend. And just like after a regular impulse, before the larger trend continues, a 3-wave correction in wave 2 or B occurs. In this example, the leading diagonal in wave 1 is followed by a running flat correction in wave 2. Then the uptrend resumed in wave 3. Now let's see how leading diagonals look like in a downtrend. 2013 was a nightmarish year for gold investors, who saw the price of the precious metal crash from nearly $1,700 to as low as $1,182. Even though the exact size of the sell-off was impossible to predict, there was a complete leading diagonal on the daily chart of gold, preparing Elliott wave analysts for lower prices ahead. Now we can see that the leading diagonal fits in the position of wave 1 within a 5-wave decline it took gold years to completely recover from. The next example shows us a leading diagonal as wave A within a zigzag retracement. In fact, this 4-hour chart of gold makes not 1, but 4 leading diagonals visible. We will focus on the big one, labeled as wave A in brackets, which took place between the low at $1,123 and $1,264. It is made of 5 waves, where waves 2, 3, 4, and 5 consists of only 3 subwaves, while wave 1 is a textbook 5-wave impulse. Wave A then makes way for a double flat correction in wave B, whose wave A is a running flat itself. Wave B ended at $1,204 and gave the start of wave C, which took the price of gold up to $1,357. The other 3 leading diagonals on this chart can be found in the position of waves 1 of C of wave A of B, and 1 of C. A more contemporary example could be seen on this chart of the S&P 500 index, where wave A of the 2022 bear market was a clear leading diagonal. And because of that, wave C couldn't be an ending diagonal, so the only other option was a normal 5-wave impulse. Recognizing a leading diagonal can help you determine the direction of the larger trend. One problem is that while it develops, this pattern looks a lot like a double zigzag correction. Keep both alternatives in mind when you think you have found a leading diagonal.